Hello tradies, welcome to today's trade demonstration video, first one for 2017. I know it's been a while since my last video and you guys have been sending me death threat level requests to do another video, so I thought I'd take an opportunity here, do a recording of a trade I've taken going into 2017 here on the pound New Zealand dollar. I've taken a breakout trade and it's a fairly straightforward setup. Let's walk through the trade. The trade setup basically is a consolidation breakout. It's really as simple as that. I have my battle station indicator for MT4 loaded on, and it's just designed to be a chart assistant really. It can detect breakout events and candlestick patterns and things like that. So what we basically do with the battle station is we use the MT4, the square tool here, to highlight boxed consolidation like this, tight little ranges. And then when the battle station sees these markings on the chart, it understands that you're marking out consolidation. And then what will happen is it will monitor the box for you. And when it detects a nice clean candlestick breakout like this one, it will flag it and highlight it on the chart so it gets your attention. And it will also send you a notification to your smartphone, the Android or iPhone. I'll put that on the screen now for you. So this is the message I got. And that's just really for convenience. You don't need that. You can just highlight the consolidation yourself and just watch for any breakouts there. But if you're away from the computer or something like that, it does come in handy to get those alerts. So let's just take a quick look at the weekly chart. So the weekly chart shows us in a fairly weak market. There's no strong, compelling reason to be a buyer here. Only around this area where the consolidation started, we could potentially have been watching for bullish breakouts, which would have also made sense here. But the market has broken to the downside now, and that aligns with the overall weakness of the market. So that's not too bad either. So we can roll with that. Due to the pound being butchered lately from the Brexit events and things like that, it's moved into uncharted waters here. My history is going back to 1999. So we're at all-time lows here. So the pound is just weak, and that's just driving this market down here. And I think this week the New Zealand dollar has picked up pretty bullish. So that's really driving this crosspair down too. But on the technical side, if you have a look at the weekly mean value, I've got the 10 and 20 exponential moving averages here. But generally it's the 20 that you want to watch out for. And the 20 exponential moving average is a good containment line for trends. You'll see with this whole downtrend on the weekly chart that the market usually stays contained below the 20 moving average. We do get some overshoots and things over here and here. Generally the market's suppressed under that level. Now if we did get a breakout on the upside of that consolidation structure, that would have been a break through the 20 EMA. Also, that would have been a very bullish event, but we've got a break to the downside, and we can see the market return to the 20 EMA, consolidated, and then we're moving back down in favor with the trend there. So weekly chart just really gives us a very bearish picture. On the daily chart here, we can see the consolidation forming. We've been watching this in the war room. That's why these shape tools are really great to highlight. Sometimes it's nice to just highlight the consolidation and it just flags it for you for future reference, and then you can really get some clarity visually when you see those breakouts. You can really see what's going on once you mark out the consolidation like that. It just pops out at you. And of course with the battle station as well, that's that extra layer of alertness there that the breakout is occurring. I said it's not too hard. You don't need any extra tools or anything to do it, to spot the breakouts. But anyway, so generally with consolidation, a couple of rules. Consolidation, the longer it stays churned up and stays contained within its structure, the longer that occurs, generally the rule is the more potent the breakout. What we're looking for is a very clean breakout. Okay, so let's just take a bullish example. So let's say the market came up here and we opened here and we closed outside of the, actually I'll make the example a little bit more extreme. So we closed outside, but we had this upper wick coming out. So what that would suggest is the market broke out of the box structure, but immediately after the breakout, the sellers would be coming back in and suppressing the move. And that's not a good sign for a consolidation breakout, right? Sometimes the candles like this that do close outside of the structure, but with a upper or lower tail, they still can work out. But what I like to see is a nice, clean, strong breakout close here. So we can see this candle has a nice, thick, bearish body, and the close is very low towards the candle's low. And this is the daily chart, so the session actually closed pretty close to its lows there, and really just shows a nice, powerful move out of the consolidation, and that's much more convincing than, say, a breakout, a close below, but we've got some wicks and things hanging out. It's a very like weak looking breakout. So I generally try to target these strong looking ones like so. Now, in my experience, these breakouts are very powerful. And if you go back through your charts and have a look at and highlight the consolidation, like I have here, and look at the breakouts, you'll generally find that when you get these strong breakout candles like that, they generally tend to just take off straight away. They don't often offer too much in terms of better entry prices or anything like that. It's just breakout and go. We can place like limit orders here, up retracements of the candle, or look for retests here on the bottom of the structure and things like that. So as soon as I seen this, I just shorted the market, and I've used the actual breakout candle there for my stop. So if the market does come back up and starts digging back into this consolidation structure, as soon as it takes out the previous candle highs there, that's my reference point for the trade is not working out as anticipated, and the whole trade hypothesis is scrapped. So we get out there. This stop loss is a little wide here, but that's fine because, like I said, the volatility that usually follows after these kind of consolidation structure breakouts is usually quite good, and it's very easy to hit an easy 1 to 4 or something like that. So I've just targeted the previous swing low down here, which is the only reference point I have for a support level. We've got this one here, but that's just not good enough in terms of reward. And I think if the market is going to go, it's going to extend beyond that. I think if we're going to see a decent move here, it'll probably be to at least down here. So I've set my target there. I think that gets me about 1 to 4.5, which is pretty good. And yeah, so that's it. That's the breakout setup. We'll leave the trade alone. This is basically set and forget kind of thing here. We'll check in later on and see how the trade played out in the next part of the video. Well, hello traders, it's Dale here, back revisiting this trade on the pound New Zealand dollar. Unfortunately, it's not looking too healthy at the moment. We did get that initial breakdown as I expected, but the market seems to have found some support down, well, around this area here. We are really kind of in uncharted territory here. We've only visited down here once from basically what I can see in my history, so we don't have too much history to reference any major turning points here, but we can see that the markets dive down and basically rebounds very aggressively. We had this event here where the pound rallied on the back of the what was it, the Brexit exit plan or something. Yeah, we can see from the price action that the bullish strength here is really building up. Now, I was contemplating just cutting the trade after that event there, but I thought I'd give it a chance just to see if it was just a news event spike or not, and whether it was going to continue to move back down off these higher lows around here. But yesterday's candle, excuse me, yesterday's candle did show a move down. It was looking okay. Looks like maybe it was going to resume, but then we closed with rejection of lower prices there, which is very concerning. And if we go to the 4-hour chart here, we can see a very concerning pattern here too, which is now we're starting to get higher highs and higher lows. We've got the 4-hour chart stepping up and transitioning into a bullish environment here as well. So this trade may still turn around and it may actually work out, but I think I should have been a little bit smarter with the entry because this was such a large candle. Usually these breakouts are fairly potent, and I thought it would generate a decent move, but it only generated a short burst downwards. And there was actually a retracement opportunity there too. If we grab the retracement entry, we may have just skimmed in with 1 to 3. But with these breakout trades like this, as I was explaining, usually they do generate very strong explosive breakout moves that do last a long time. But in this case, it was only a short burst, and I was actually interested in the bigger picture here. There may be another opportunity to short the market as price does move back into this little hot spot here, we've got the previous structure support area here, and we also have the mean value intersecting that area as well. So we've got a lot of properties coming together to create a likely resistance area. So there may be a sell signal here. But I think what the best thing to do here is to just cancel the trade, wait for that next sell signal and see if that does occur. But I've got a feeling that the market's going to continue to push up and basically rebound here. This has basically been a mean reversion move. I was going to try and ride it out, but it's obviously not going to continue printing lower highs here. It's trying to push higher. Let's close this off. Okay, so we'll close that. And goodbye, Mr. Pound New Zealand dollar trade there. So I think I invested a lot of time into this trade. You can see there's a few daily candles there, which I sat through this. And that can be one frustrating thing about swing trading. You invest a lot of time into a trade idea, or any trading strategy really. You invest the time into the idea. You are investing that time believing that that trade is going to work out. And I really think that that's where revenge trading can stem from, because you invest all the time into the trade and energy and your planning and everything like that. And then the trade actually doesn't go with your expectations. Your hypothesis is basically proven wrong, and the market goes the other way. And it's just almost like a denial thing. And that denial kind of attitude is probably how revenge trading is basically manifested there, because you believe that you were right, you put the time into the trade, and you just it can't be right. You just know this market's going to turn around. And my analysis was so good, but sometimes these things happen and the trades don't work out. It's best to just dust your hands of this market. Obviously, it's not doing what you anticipated it was going to do. Just wait for another signal on another pair. Yeah, that's it for today. Hopefully, I can get another video out soon. So I'll see you guys around the site maybe, and best of luck on the charts.